We're going to go ahead and jump into it. GameStop up 69% right now. This morning, it hit a high of up over 100%. This is impressive. What is it, 2021? So what's the catalyst? What's driving this up? 116 million shares of volume. The catalyst is that Roaring Kitty is back. Well, sort of. He posted a meme on Twitter, and it was kind of like a things are getting serious meme where you're usually like lean back like this, and then like you're leaning forward like this. And so on that catalyst, that meme, GameStop is up 70% right now. So, here's my kind of feeling on it. My feeling was that this is not going to be anything like what we had in 2021. The big money shorts are ready. They're not going to get in front of it too soon, and they know all the tricks that they've got to hold it back. I mean, they succeeded the first time, and they will, I'm sure, succeed if push comes to shove. So the fact is, my gut feeling was that, all right, let's look at the daily chart on this. Are we at a point in the daily where this is like a tipping point that if we break, things go crazy? And usually that would have to be near all-time highs. So the way it stands right now, if you recall, they did a traditional stock split of 1 to 4. Not a reverse stock split, but a traditional stock split. So the price not adjusted for the split would be 30 times 4. So right now, so it'd still be $120 a share pre-split prices, which would obviously still be a huge increase over what it was prior to the move in 2021. But nonetheless, the high up here, which was 500, again, factoring in before the split, we're still well off that level. So as a result of the split, the current high is showing, instead of 500, it's showing at $120 a share. So given that this is the chart, and we'll just accept that it's adjusted for the reverse split or for the traditional split, the levels that I think are in play would certainly be at $50 a share. $50 is an important level. And then I start to look to the left and up. And these are the levels that I start to break down. So I look to the left right here. I tag that level. Actually would mark it just to the high of that red candle, but it's fine. It's close enough. I would tag that level there. I would look to the left. I would tag this high right here. I'd go to the left. I would hit that spot right there. Go to the left over here. Oops, little spot there. It's a small spot. It's okay. So small little spot there. And then I would say here and here. So these are the sort of big levels on the chart. Now, when I was looking at this morning at like $22, $23 a share, what was I thinking? All right, well, it's above the 200 moving average. However, it was above the 200 moving average here, and then it was back below it. It was above the 200 moving average here, and then it was back below it. It was above it here, and then it was back below it. So, being above the 200 by itself, it doesn't mean a whole heck of a lot for me with this particular stock. Looking back, we're kind of back to the prices we were at just last year, right? I mean, it came all the way down to 10 and is now, hit a high of $38 today, which is a really nice rally here. But this rally, I don't think would have gone to here if it weren't for, those posts on social media. So realistically, because there's not a true catalyst to support the move, I'm not sure that it's going to hold these levels. In fact, I don't think it will. And so my gut feeling on this was that this is a move that's going to get faded. It's popping up, and I don't know how high it's going to go, but it's eventually going to get faded. It's going to come right back down. And so, we get this move up, and then it comes back down right here. Move up, and then it comes back down. So that's my kind of gut feeling. So this morning when I sat down and I saw that GME was on the scans, I was like, oh boy, all right, this is going to be a distraction. It's a 269 million share float. It's not really a small cap stock. Now it's volatile, which I'll give you that. It's definitely volatile, but it's got a lot of high frequency algorithms on it, like AMC and these other meme stocks. They're not really easy to day trade. There are more things that people do well or seem to do well buying and just holding. So I really didn't have a lot of interest in trying to day trade it. Now I did trade it, and I'll go over those trades, but my gut feeling was that I don't think this is going to sustain, and this is the type of stock that I could get myself into some trouble in because it's more expensive. More expensive stocks have bigger ranges, and next thing I could see myself punching an order for 4,500 shares and it drops 2 points, I'm down 9 grand, just like last Monday. And I was like, I don't want a repeat of last Monday, especially trading a higher price, higher float stock that's a meme stock that's outside of my kind of wheelhouse. Now, I did really well trading GameStop in 2021. I have a bunch of episodes here that are recaps. I have some live trading archives. I have a day where I made nearly $200,000 live trading, YouTube live streaming, and it was on GameStop. So I've made my money on GameStop. But I also kind of have a sense of when not to go back to the well, because I sort of feel like at this point, this well of GameStop it's not, I'm not gonna say it's poison, but in terms of for active day traders, I just don't think the opportunity is going to be the same. Having said that, today was no doubt a really big move relative to what is normal for this stock. So, in the context of the last couple of weeks, we've seen over a dozen stocks that have gone up over 100%. So in that lens, it's not anything that special, but for GameStop, it is special. Okay, so I sat down, looked at the scans. I was like, oh boy, we've got GameStop. So I pulled it up, and one of the first things I noticed pre-market was that we had a lot of sellers at $25 a share. So on the level 2, there were a lot of sellers stacked at 25. So kind of sitting like right in this area here. Because of all those sellers stacked at that level, I didn't feel comfortable buying for this breakout right here. It ended up breaking 25 and then flushing back down. And then after the flush, not that far, but it flushed back down. And then it kind of popped back up. So I was like, okay, you know what? If it's able to hold, it's able to hold. So now let's get zoomed in here on this chart a little bit more. Let's see. Sorry. All right, so we're going to get zoomed in. Get zoomed in here. Okay, so we first have this break of 24.50. We come up to 25. We had this sort of jackknife right here where it flushes back down to 24.20. And then it sort of curls up right here to 25. It breaks, it pulls back, it squeezes up to 25.50. It pulls back, it pushes higher, it pulls back. And I ended up taking a trade on it right in this area here. What I was looking at right here was there was a big hidden buyer at 26.20, absorbing shares. So we kept coming down to 26.20 and we kept seeing buying. There was a lot of buying right there. So I was like, okay, there's no question about it. There's some bid support on this. So I took a couple trades right here. The first one was at 26.25 and it comes up to 26.50, but it wasn't able to break that level. Then it pulls back. I do another dip trade. It comes up to 26. It breaks over 26.50 and then it flushes. And then right at the open, it pops up. It flushes all the way down, false halt, bounces up, pushes lower, and then does an epic red to green move all the way up to the first halt, which opened higher into a second halt, which opened higher into a third halt, which opened yet even higher. Let's see, into a fourth halt, and I think we had 5 halts up. So I think it was, I'm pretty sure it was 5 halts up on this, which is, I mean, that's really pretty impressive. So 5 halts in a row going up. Let's see, it was 1, 2, 3, 4, 5. And then we had our first halt going down, and then we dropped again, bounced up, pulled back again, bounced up. And at this point, I just said, you know what? It's going to be too difficult to trade in this area. So one of the challenges for me with this type of stock was when you look at this setup right here, you look at this pattern, where would you say was the safest place to be a buyer? I mean, I suppose you could easily in hindsight say right down here, this was the first candle to make a new high. Sorry, it was this one right here. So first candle to make a new high was right there. And that was a spot to be a buyer. Now, the problem was at that time, we had this caution flag of a high volume red candle right here. So we had a high volume red candle where we started the day, and then it dips down. So I was sort of feeling like this price action was in the shadow of this big red volume bar. You know, when you have a big volume bar like that and it's sort of false breakout, I feel like it kind of casts a shadow forwards where until we can break over the high of that level, I'm not really interested. But the fact is, when we finally did break through the high of that level, then we're dealing with the fact that, well, this is a stock that has just shown that it can drop $1, $2 a share in an instant. Do I really trust getting in it right here? And the answer for me was no. And in hindsight, I wish that I had put, all my money into GameStop right here. But, hindsight's 2020, and I never would have done that. So I don't really feel that way. In hindsight, yes, it's easy to see that that would have been a good entry. But in the moment, I didn't feel like I was able to manage risk. So the way I kind of look at this was today, this was the most obvious stock that everyone was trading. It so happened that I didn't like it. I didn't like it because the float, because the price, because the level of volatility, because the meme stock, because it didn't have a clear catalyst. And I know that I'll do a lot better on a stock like some of the ones we had last week where we've got breaking news, it's squeezing up 50, 75, 100%, and it's priced between $5 and $10 a share. I know that that's where I'm going to do better. That's where I can afford to buy 10,000 shares. If it goes up 50 cents, I'm up $5,000. Now, I can afford to buy, I guess I have enough money in my account to buy 10,000 shares of GameStop, but do I really want to put $250,000 into it and have it flush and be down $25,000? No, I don't. I really don't want to do that. So for me, the right move was to sit on the sidelines during this area here where I didn't feel I could manage risk. It then opens from the halt and just sort of pushes higher. And I was like, I can't chase it here. We've already got 2, 4, 5 candles in a row that are green. It then opens higher and pushes even higher. And I still say I can't chase it. It then goes higher and higher. And I'm like, I can't chase it. So it ends up peaking and flushing down. And I was like, okay, there's the halt down. And I said I would buy here if it does a false halt. And I would do that for the spring back up. It did not false halt. It did a real halt. It then opens lower, pops for a second, goes lower, bounces for a second, goes lower. And I say, you know what? Now it's pretty clear. MACD is about to cross over. This was the front side of the move. We basically went parabolic. And now this is the backside. Now, it's possible that we could rally back up through 38 and 40, but I don't think it's going to happen because we don't have a really true catalyst. So my gut feeling was at that point to walk away. And so we'll look at my trades for the day, but I think that I made the right call. If we look at it now in this area, you'll see that it's just faded back down, right? So now we've got this kind of sell-off back down. It's near VWAP, volume weighted average price. Could it bounce and curl off that level? It could, but is it going to? I just don't really think so. I think the easy trades on it are done, and easy is, so to speak, they weren't really all that easy. So this morning, this is my grand total. A measly $555.48. And I'll say that the moment I start thinking of it as measly and as nothing, I'm no longer grateful for the real money that I made this morning. I have $500 more than I had at the beginning of the day. And when you start comparing yourself to other people, you say, whoa, that person made 5,000, that person made 100,000, whatever it is, all of a sudden, comparison's the thief of joy. All of a sudden, you're no longer grateful for what you do have and for what you did. Now, for me, what I did right today was I maintained discipline. I said, I'll break the ice on it when it was around 26.20. And I tried a couple times, made small profits with 1,500 share position and then a 3,000 share position, which even then I felt was a little heavy. And I got basically nothing for it. So I was like, I don't think I should push it here on this one. And that was the right call. Now, my first trade of the day was actually TGL, and my second trade of the day was CCLD, and both of those rejected. So I didn't have a profit cushion today. And I felt like, why don't I have a profit cushion? Why didn't those work? Perhaps it's because GameStop is the obvious stock. That's the one everyone's focused on. So these other ones are, GameStop has the spotlight today. And for that reason, I wasn't able to make a lot of trades on other things and find success. Everyone was focused on GameStop. Now, in total, how well did day traders do on GameStop today? I don't know. I don't think anyone is going to actually know that number. I mean, it's probably no one knows. I'm sure there are people that did really, really well on it. In hindsight, I could have been more aggressive. But as soon as I start thinking of I coulda, I woulda, I shoulda, that's coming from a place of emotion. Greed, disappointment, fear of missing out, the FOMO, the regret of missing out. And though the second you're using those words to describe your trading, or you're using words that are black and white, like I never get these. I never happen to be the one who's up $5 a share. Again, it always black and white terms, because that's not the way it is with trading. So when you're thinking that way, you're starting to get more emotional. And so for me, I don't feel emotional right now. I mean, I had moments where I was like, oh, I'm a little annoyed about this, but I recognized it. You'll have the feeling. You can't stop yourself from having the feeling. The important thing is to be aware that you're having the feeling, and that those feelings can then sort of guide your behavior and then lead you to overcompensate and take bad trades and start to spiral. So when you have an insight into the pattern, now the awareness of I'm feeling this way, therefore I'm more likely to do this, this, and this, and this, helps you sort of get in there before you cross the point of no return. And that's really one of the best things you can do. So today is a small green day. It doesn't really move the needle in a big way for me, but that's all right. It's a success from the perspective of discipline. So if you recall, last Monday, had a bad day, and that was disappointing. So then I sort of pressed the reset button and came back Tuesday, first day of discipline. Wednesday, Thursday, Friday, all good discipline trading. Monday, 5 days now of discipline under my belt between me and the last kind of big red day. All right, I want to make it 10. So all I have to do right now is focus the rest of the week, the next 4 days, on keeping my head down, hitting some base hits, and not letting myself get caught into chasing money, chasing moves. Just focus on A quality setups on the type of stocks that my metrics tell me I trade the best. And if I can do that, I'm probably going to have a good rest of the week. Focus on the process. The profits are secondary. The profits are a byproduct of the process. Okay, so with that, I'll wish you guys a great rest of the day. I hope you crushed it on GameStop, but if you didn't, no big deal. It's only one day, and we'll be back at it first thing tomorrow morning. I'll remind you, as always, that my results are not typical. Trading is risky, so manage your risk, take it slow, and I'll see you guys back here first thing tomorrow.